All right, Counter Range Theory Trader, back with you on another video. Very informal, just the weekend review for February see what the starting date is, 24th or 23rd, Sunday, whatever, 24th through the 28th. So let's not waste time to get into it. I'm only going to isolate the pairs that actually had a setup for this week. So here they are. I'm just going to go through them, pardon me, alphabetical order to show the ranges and the result of said range. So starting with Sunday, Monday. All right, so we had an ATR range, and actually, what I'm going to do, not instead of Sunday, Monday, I'm actually going to start with Friday because sometimes there are ranges that are established in Friday on Friday that play out on Monday. So that's what we're going to start. If there's any Friday ranges, I'm going to highlight those. All right. So here we go, because that's always how I start the week. But anyway, all right. So starting with Friday through Monday. All right. So there's an ATR range right here of 96 pips. Right. So you're looking at isolating the candle range low right here. You could have had a decent entry right here in the 9 p.m. hour as price did poke below the range and then close back inside of it here. However, that would have been a loss. As you can see, price just hit this high and then tanked for the rest of the week. All right. So one of the things you have to remember is that this is not 100%. That's why I wanted to highlight this. You may have a strong range low, price pokes below it and then comes back above it. But then for one reason or another, it still decides to just tank, So that's going to be a part of the process. The trend was just short. Now, all is not lost, though, because Friday, oh, yeah, so this range right here didn't qualify because it wasn't 50 pips. I only trade 50 pip ranges and above for the yellow candle, same for this blue candle. Well, not exactly the same, but there was just no trade here. The price never came back inside the range here, so there was just no trade for this blue range candle here on Thursday. And then a long trade did finally play out on Friday. So this was the range candle here, which was 54 pips. This was at 5 o'clock p.m. on Thursday. Money candle poke below. Did I take? Yeah, I actually took this trade. This was because this was not a good trading week for me, in all honesty. However, at the same time, this trade did work out because the money candle did create the low of the week. Let's drop down to the 1 hour to see a decent entry. Best entry would have been, or this where I got in was about right here. I think it's around in the 10 o'clock hour where you see price poke below the 4-hour range and then close back inside it. So I went ahead and just got in here, stop loss below the low. We'd like to see the money count and create the low of the week as well. And that was good for, I think I got about 40 pips or so out of this. It did go up 83 pips total. I got out a little early, but a win is a win. So that was that one. So that one, just trading this one pair, would have been one win, one loss. Let's go to CAD Yen. Okay, so same thing on CAD Yen, whereby you had a long range here that just did not play out. Something that can help hedge against this as well is to set your stop loss to break even. When you get a little bit of profit, so say if you'd have got in, like say you got in somewhere in this candle range here, and then price coming back down, you would have broken even or not lost anything at all. So that helps hedge your losses because ideally you do want price to stay inside the range. But anyway, so this range here that was established on Friday did not play out. There was a range that did play out on via Thursday, Friday. So this was a momentum trade whereby, and if you don't know what I mean when I say momentum trade, look at the videos on the channel. You'll see those, or I'll link them in the description as well. But you have a range here that was 79 pips for the body. That was Friday at 5 o'clock a.m. We like London ranges. Okay. Price broke outside of the range, okay, and then closed back inside of it. While this one here, this candle here was a money candle. As you can see, this money candle low didn't hold. Okay, so I'm liking momentum candles, momentum setups a little better because they weed out money candles that don't hold up. Sometimes a money candle will hold, but sometimes it won't. So this one to me just is a little bit of a stronger signal. We just have to remember though, if you're going to take momentum trades, you do not trade outside of the range. Your best entry is always going to be around the range bottom if you're going long, or around the range top if you're going short. So in this case, the entry would have been, let's see, if we drop down to the 1 hour, a close on the 1 hour. So right here at 1 a.m. on Friday would have been our best bet. That would have been a good entry here. And we do not like to see the low of this candle. This is our invalidation zone right here. the candle that broke the low. We don't like to see that being closed below as well. All right. This candle right here, because this is the candle that closed back inside the range. So we don't like to see price breaking beyond the range and breaking out the candle. We just want to see a straight rise if you're taking momentum trades. So I'll go back out to the 4 hour now. And so this one would have been good for 80, 90. Let me see. Yeah, almost 100 pips. Let's just say to the range top about 90 pips. All right. So that was that for Friday. This was Friday. Yeah, right. Friday. Okay. Most of the yen pairs played out the same. Most of them. This one, let me see, Swiss yen. Okay, so this is one where the range was established on Friday at 9 a.m. and it actually did play out pretty much. This would have been a straight rise. So this money candle here, which was at 1 p.m. on Friday, actually did hold. So this one could have been one that you could have held over the weekend. We drop down to a 1 hour. Reset this. I mean, you have plenty of opportunity. And remember our rule that when price closes back inside the range, if you miss this move here, you use your fib. And that's your trading window right here. 50%, around 50% of the range. Anywhere in here you could have got in. So that was from like 4 a.m. on Monday through about 10 or so, 10 a.m. Monday. So you had plenty of time to get in and ride it up. And if you would have caught it, that would have been good for about 89, 90 pips up to the top of the range. So that would have been good for that. So this one did not follow the same vein as the prior two yen pairs I showed you. This range actually did. This Friday range did play out on Monday. So, don't always look for pairs to move this exact same way. They will not. Okay, they won't. But that's how that one worked out. So that's the 4 hour chart view here. Okay, the entry would have been somewhere in here because of this money candle. It did hold and then a straight rise. So that would have played out perfectly. So we'll go to the next one. Euro CAD. I believe that one was a short. Yeah, this one in the CAD really whipped my tail this week. There was Friday news on it, so I believe that's why it was the predominant reason why. This one was just, it worked out, but it was just real choppy. The range candle is here. Now, this isn't ideal because this range was about 40. The body was 43 pips. The entire range from top to bottom was right at 50. So, it's borderline. The main reason I took it was because of the fact that, you got three candles in a row. Eventually, it is going to pull back. The money candle didn't come until right about here, 5 o'clock. But then if you notice here, it did get rated. This big old wick here came up and then closed back inside of it. So this was just real choppy price action. This is not ideally what you want to see. Could have entered here, but at the same time, you would have had to sit through all this drawdown because price never did break out of the range. It just wicked it, and you will have that sometimes, but you have to be prepared to through the drawdown. This drawdown was over 50 pips. And if you're aiming for 50 pip profit, you don't want to necessarily sit through 50 pips of drawdown either. So this was just ugly price action. So let's keep going. Okay, Euro Yen. Okay, so we had the same Friday range. Okay, the yen pairs all established a Friday range to take us into Monday. And this one was just real choppy, just real ugly price action here as well. So you had your money candle right here at 1 p.m. on Friday. So going into Sunday, Monday, price just immediately shot up. Not the ideal place for an entry because the 5 o'clock hour, you have that big spread. Don't bother trading that before any exchange is actually open or any markets actually open, which is Asia at 8:30 p.m. So just real ugly price action. Price did come back and it kept pinning the bottom of the range. But I mean, your guess is as good as mine on this range. There were places to get in and get a little bit of profit, but it didn't even touch the top of the candle range before eventually tanking. The best trade would have been not the Friday range, but I'm sorry, not the prior Friday range, but today, which is Friday. This range right here, this 4 hour range right here would have been the best trade. Right here, this was a 5 o'clock p.m. range on Thursday. Price dipped down and closed inside of it. You had a money candle and the big move here, and it just never looked back. So if we drop down to the 1 hour chart, the ideal entry would have been right here at 10 p.m. That should have been the entry there. This candle here, it creates the low of the week. We like to see that. And then price just rockets up. So that would have been good for, I mean, it just really took off for like 100, that's, geez, that's 150, 160 pips, right? Okay, it broke out of the range as well before coming back down. So that one would have been a great trade. So sometimes you'll see where price falls all week and creates that low on Friday. These Friday trades can sometimes undo what Monday through Thursday does, where if you got steady decline pretty much all week, the price can only go down so far before eventually it does pull back. So that was that. So that Friday was the best trading opportunity for that one. Euro dollar, kind of tricky because you had just a straight 3 candle pattern here, real open and shut. 5 o'clock p.m. Sunday range here, which was right at about 50 pips. And just a 3 candle pattern. Right here was the money candle. At 9, the entry would have been right here. 1 a.m. on Monday, straight drop. 50 pips, done deal. Just done. Just right there. There's your entry right there. I mean, it doesn't, this is the perfect trade here. You're out in 8 hours. You're done. 50 pips. But as you can see, most of the pairs did not do that. They were chopped around, etc. So, but this one was the great trade for EU. Next, we'll go to GJ. Okay, another Friday range here. Just real choppy price action again. I'm not going to bore you with the details on this one. Just the same thing. So money candle was here, but you just had a bunch of chop. If there was an ideal exit, it would have been right here. Anytime I see a yellow candle and I'm long, I pretty much get out at that point because it's exceeded its average true range. So the odds of it continuing, they just drop. So I just go ahead and get out. So this one, if you took it and had the patience to sit through all this chop, you could have got about 136 pips, which is good. You just had to wait for this. Didn't happen until Wednesday, so you would have had to sit through, like Sunday, Monday. You just saw this chop. That's all. But your payout wouldn't have come until Thursday. So that was that. GU, we had a Tuesday 5 a.m. range for the London session, which was short. The range was right at 50 pips. Kind of ugly price action. This was pretty much a momentum trade. So what we look for is some consolidation where it breaks out of the range and then closes back inside of it. And remember, when it does that, that's our no trading zone. So this is our no trade zone right here. We do not trade above the range if we're trying to go short. We wait for price to close back inside the range and we take the straight drop. So as always, our entry is as close to the range as possible. So the perfect entry would have been this candle's open right here, which was Thursday at 1 a.m. Somewhere in there. But let's drop down to a 1 hour and see what we can see. Okay, so I'll tell you what, the first close inside the range was right about here. So we'll say that's our ideal entry right here at about 4 p.m. on Wednesday. A little bit of drawdown. Make this a little bigger. Okay, so this right here, in terms of momentum, okay, you have the spike up and then the close back inside. So once price closes back inside, the invalidation zone is the candle that broke inside the range, okay, right here. Okay, because this is the candle, okay, very important for momentum trades. The candle that breaks inside the range, you don't want to see this high broken. It can pin it like it did here. This is just to scare you a little bit, but price should not close above the candle that breaks inside the range. This is for lack of a better term, it's kind of like the money candle for the momentum setup. All right, so price can wick it, but it still should close inside of it. And that's how you handle that. So that would have been good for, let's see, from that entry to the bottom of the range was good for 60 pips. Okay, so that was that. Next, New Zealand, yen. Okay, same deal as the other yen pairs. False move for the Friday pair. Like I said, setting your stop loss to break even once you get a little bit of profit can help protect your downside just in case the range doesn't hold up. This range right here was 40 pips, so that's not even worth looking at. This yellow setup, just not something we consider for a short. The best setup for this one on New Zealand would have been the Friday range, where you had a 5 o'clock range on Thursday. And I like these Thursday, Friday reversals, or not reversal pullback, however you want to look at it. So where you got it Thursday to end the week strong, and then the money candle creating the low of the week on Thursday around 9, and then just that straight rise. I think some people call it a V-shaped recovery. But let's drop down to the 1 hour to see our best entry. There's the money candle right here to create the low of the week. Anywhere in here would have been fine. So let's just say you get in at, what is this, 11 o'clock. That entry right there, straight rise, no drawdown, would have been good for 64 pips. Okay, so let's see here. Next up, dollar Swiss. I just included this one just to show you what's possible, but this range isn't the ideal one because this range was only 25 pips, but it was a breakout. So, fairly simple though. You just had a 5 o'clock Tuesday range during London, money candle. Money candle did hold to create the low of the week. And, sometimes if you catch a low of the week and convert it into a swing trade, it did break outside of the range. And so that would have been good for, if you get in right there, this was, what to say, 445 or so. I mean, it's still rising. That was good for about 100 pips. Okay, so, yeah. And then lastly, dollar yen. I was going to take this, but didn't because the U.S. had news. But again, real choppy price action. The Friday range from last Friday, the 21st of February, it did hold. It just had some pins to it. So in terms of a momentum setup, remember we do not trade here. So all this is our no trade zone. Your best entry from this Friday range would have been, you had opportunities to get in like from Tuesday at 9 p.m. and then again at like Wednesday, 9 p.m. So, but not down here, just, as close to this range bottom as possible. And ideally, again, you're hoping for the low of the week to hold, which was right here. The low of the week was created on Tuesday. And as long as this low holds, you're ideally trying to still stay bullish based on this range right here. So, and that would have been good for, if you just got in right, let's just say right here, Wednesday, price did rise up over 150 pips. So those were the best trades for the week that we did see. Just these. The rest, like I said, didn't really offer anything. So simple, informal weekend review. So if you enjoyed the video, don't forget to subscribe, and I'll keep the reviews coming. But definitely look at past weeks as well for yourself. Try to find your ideal setup so that way you can train your eye to know what you're looking for. And just to reiterate, remember that this method is not 100%. You may have a strong range, and if price comes up and then starts to retrace like this, see, this is always possible where it could still keep trending. And if it does, you definitely want to either move your stop to break even when you see some profit, or just set a set stop loss and don't let your account get blown out. And keep an eye on the pair because you never know. Just because it starts down, eventually there should be a range that's going to come along like this, and you'll still get your long set up. So you'll get a Thursday V-shaped recovery to end the week back up a little bit. So I appreciate you watching. I hope you have a great rest of your day. Don't forget to like and subscribe, leave a comment, and again, thanks.